Welcome to the Deep Dive, powered by Talk Tickers. We cut through the noise of earnings season to give you the core insights. Today we're tackling First Majestic Silver, ticker AG, and their Q3 2025 earnings call.
Yeah, this one was interesting. As a real study in contrasts, management hitting records left and right operationally, but the market, immediate thumbs down. Shares sold off pretty hard right around the call.
Definitely. So we're digging into that tension, the company's success story versus the street focusing on missed numbers and, well, that ongoing legal issue.
Exactly. The mission is to figure out why there's such a disconnect.
Okay, let's start with the numbers that hit the tape first, because that really set the tone, the negative one anyway.
Right. The headline miss. Because no matter how good your operations are, if you miss consensus, well, the market tends to react first and ask questions later.
And it wasn't a small miss either. Non-GAAP adjusted EPS that came in at 7 cents.
Consensus was looking for 11 cents, so 4 cents short.
And revenue came in at $285.1 million. Now that's a massive jump, like 95% year over year.
Which is incredible growth.
But still, it fell short of the $311.9 million the street expected. By almost, $27 million?
Yeah, a decent gap. So you see the immediate problem. Huge growth, records internally, but missed the external benchmark.
But like you said, that's only one side of it. Operationally, they were shouting from the rooftops.
They really were. Record silver production, 3.9 million ounces. That's up 96% compared to last year. Just massive.
And when you add in the other metals, the silver equivalent ounces.
Right, the AEQ, as they call it. That hit 7.65 million ounces. That's the standard measure. Lets you compare apples to apples across miners.
Okay, huge production numbers. Did the cash follow? Was it real money hitting the bank?
It absolutely did. Operating cash flow before working capital changes and taxes was $141.3 million. Very strong.
And the really important one, free cash flow, FCF.
Yeah, FCF landed at $98.8 million, nearly $100 million bucks. And that's the cash left after everything needed to keep the mines running. Pure profit power, essentially.
Wow, nearly $100 million free cash in a quarter. That's serious. But it feels like the market's just not giving them credit for it, like applying a zero multiple because of uncertainty.
That's the vibe, isn't it? The market's basically saying, great quarter, guys, but can you do it again? And what about that other thing? The predictability just isn't trusted right now.
Okay, so let's pivot to management side of the story.
Yeah.
They were really pushing back against that skepticism on the call, highlighting liquidity, operational wins.
Oh, yeah. They hammered the balance sheet strength. Cash and equivalents hit $435.4 million.
Plus they have that undrawn credit line, right?
Exactly. Another, $246.6 million available on the revolver. So total liquidity is up there at $682 million. And the actual treasury, cash plus restricted cash, is a record $568.8 million.
That is a massive war chest, over $500 million just sitting there. Is that confidence, or are they maybe hoarding cash because of that tax dispute?
Good question. Probably a bit of both, right? Management frames it as pure strength and flexibility. And a huge part of that strength now comes from the Gatos silver deal, the Los Gatos mine.
Right, Los Gatos. How much did that contribute this quarter?
It was significant, $108.7 million in revenue and $48.4 million in mine operating earnings, just from that one asset.
That's huge. That's not just adding on. It feels like it structurally changes the company's profile, maybe makes them less reliant on the older assets.
It definitely should. Los Gatos is looking like a cornerstone. And, speaking of flexibility, they mentioned something interesting about inventory, too.
Oh, yeah. What was that?
They specifically pointed out they're holding onto about 758,000 ounces of silver and nearly 4,000 ounces of gold that haven't hit the revenue line yet.
And that's worth... What do they say?
Over $50 million in embedded revenue, just sitting there as finished metal.
So basically, they can choose when to sell that. Smooth out future quarters, maybe hit a target if needed. That's quite a lever to pull.
It really is. Gives them optionality. Now, on the cost side, they try to show things are under control despite inflation everywhere.
What were the key cost numbers they put out? AISC.
Yeah, they restated Q3 costs under updated assumptions, came out with a cash cost of $13.70 an ounce, and importantly, the all-in sustaining cost AISC at $19.41 an ounce.
Sub $20 AISC is pretty good, especially while scaling up production like they are.
It's a key target. And they were very firm, really reiterated strongly that they are on track to meet all their full year 2025 guidance.
So basically telling the market, this quarter's miss doesn't derail the plan.
Pretty much. And they pointed to other positives too, like Sandy Miss throughput is improving, costs there are coming down. And First Mint, their direct-to-consumer sales arm, hit a record $11.1 million.
And they gave some visibility into next year too, right? More growth planned?
Yeah, they're not standing still. The plan for 2026 is to boost throughput again, Los Gatos, up to 4,000 tons per day, Santa Elena to 3,500 tons per day.
Okay, so scaling up further.
Exactly. Plus, they highlighted some exploration success near Santa Elena, finding new zones in Navid and Santino, which they think will add years to the mine life there. That helps de-risk things a bit, too.
Okay, operationally, it sounds like they really delivered, but the stock got hammered.
Yeah.
So we had to talk about the big shadow hanging over everything.
The Mexican tax dispute. Yep. The elephant that refuses to leave the room.
And the CEO sounded, well, pretty frustrated about it on the call.
Frustrated is putting it mildly. He directly called out analysts and the media for focusing on it. He kept stressing, this has been going on for 13 years, and the company does not view it as material.
Didn't he use some pretty strong language about one analyst's headline?
He did, called it bonehead. It got pretty tense for a moment there.
Wow. So how did that play out in the Q&A? Did analysts push back or did management just shut it down?
They shut it down hard, flatly refused to take any more questions on the tax issue, said everything investors need to know is in the written disclosures, the MD&A, and the news release. Full stop. Focuses on mining, not legal drama.
That feels like a risky stance, though. Criticizing the people covering you while this multi-year issue hangs out there. Are they maybe trying too hard to downplay it?
It's definitely aggressive PR. For their part, they did say talks are ongoing weekly meetings, apparently, and that the Canadian government is now involved, talking to Mexico.
Okay, so government-to-government talks now.
Yeah, and they mentioned Mexico's president recently confirmed publicly that negotiations are still happening. So there's movement, but no resolution. And that uncertainty just persists.
And the market's response is basically, we don't care about your records until this is settled, even with silver prices doing so well.
That's the crazy part. Silver recently blasted through $50 an ounce. You've got supply deficits, massive solar demand. This should be the perfect environment for a high beta producer like AG. They should be getting maximum torque.
But they're not.
Yeah.
Nope.
The market's focus is elsewhere. Two things, really. One, the miss means street estimates are clearly too high. Models need adjusting down. That hurts.
Okay, estimate recalibration needed. And two,
that tax dispute just acts like a cloud, keeping bigger institutional money away. Until it's resolved, it seems like there's a ceiling on the stock, regardless of the metal price.
so boiling it down, what are the key things people should watch now? The catalysts.
I'd say three main things. One, obviously, the path of silver itself. Two, any real news, even small steps on resolving that Mexico tax situation. And three, Q4 results need to see confirmation those costs stayed down and the mine throughput keeps humming, especially at Los Gatos.
Right, proof that the operational strength is sustainable and predictable.
Exactly. Predictability is key right now.
Okay, let's shift gears to our final segment. This is not financial advice. And just a reminder to you, the listener, this is purely for discussion, entertainment, throwing ideas around based on what we just talked about, not recommendations.
Definitely not advice.
Right.
But look, based on everything, the strong operations, that huge cash pile, the inventory they haven't even sold yet, it feels like the market reaction was maybe overdone.
Conflating the estimate miss with things actually falling apart operationally.
Sort of, yeah. And management seems to think so too. They actually confirmed on the call they were buying back shares yesterday and today. Plus, they have that $50 million in metal ready to sell. And the silver backdrop is still strong.
Okay, so you have this like fundamentally strong company, great assets, lots of cash, but it's super volatile because of this known political risk factor.
Yeah.
So what's the outrageous but plausible trade idea here?
Given that mix, solid floor, but known volatility driver, I'd pitch a high conviction collar strategy.
Okay, a collar. Let's unpack that. Step one is...
Step one, you go long the stock. Buy a decent chunk of AG common shares. You want exposure to that operational strength, the cash, the inventory, the silver price leverage.
Right. Capture the fundamental value, then the options overlay. You mentioned selling calls.
Yeah. Sell near term, out of the money calls against the stock position.
Okay, why sell calls? What does that achieve here?
Two things. First, the premium you collect from selling those calls helps pay for the whole structure, maybe even generates income. Second, you're basically saying, I'm okay selling my shares if the price jumps, say, 10 or 15% pretty quickly.
Why would you cap your upside like that?
Because the thinking is, any sharp near-term spike is probably driven by volatility or maybe a small estimate beat, not the big tax issue getting resolved overnight. So you monetize that expected volatility instead of just riding it.
Got it. Collect premium, define your exit point for a short-term pop. Now, the final piece of the collar, the puts. You buy puts.
Yes, you buy far out of the money puts. This is the insurance policy.
Insurance against the tax dispute suddenly going really bad.
Precisely. It's the hedge against that tail risk, that catastrophic scenario where Mexico actually comes down hard with a massive unexpected ruling. It's relatively cheap protection because it's far out of the money. You don't expect it to happen.
But it protects your capital if the absolute worst case, the thing keeping institutions away, actually materializes.
Exactly. So the collar lets you stay long, the core story, benefit from the operations in silver, use the volatility to generate income via the calls, and cap your downside risk on that one specific major overhang with the puts.
That's a really interesting structure to navigate this specific situation. Okay, wrapping up then. The core takeaway seems to be, first, Majestic nailed the operations, built a fortress balance sheet, but couldn't hit the street's numbers. And that failure, combined with the tax cloud, led to the sell-off.
Yeah, that's the essence. And the big question going forward, now that they have the scale from Los Gatos, is can they turn that record cash flow into predictable quarter after quarter performance? Can they start compounding reliably instead of these volatile surges? That's how they potentially earn back the market's trust in 2026.
So the question for you, the listener, to ponder. Will $50 silver and operational records finally be enough to overcome a 13-year legal battle? Or does that anchor remain firmly in place?
Something to think about.
Indeed. Thanks for joining us on this deep dive into First Majestic Silver's Q3. We encourage you to keep exploring.